My name is Anthony Sebale and I'm your host for Financial Markets here at Plot 42 Nile Avenue, Kampala, Uganda's capital. Now, we promise to bring you latest information, and one of the stories making headlines is that the shilling is losing against the dollar for the first time in over 2 years. Now, the shillings between April 2022 to date depreciated against the dollar by 3%, according to Bank of Uganda. This is the first time in over 2 years that the shilling is losing against the dollar. Speaking in an interview early this week, Dr. Adam Mugume, the Bank of Uganda Director of Research, said that a combination of both internal and external factors is fueling the depreciation of the shilling against the dollar, among which include increase in corporate demand for dollars and strengthening of the dollar. Now, the increase in the global commodity prices means that the payment for oil and other essential commodities require more dollars because of the average rise in prices. So most people have been using dollars to actually buy some commodities, especially commodities that are imported from other countries. Now, put differently, the demand of dollars to pay for essential raw materials, most of which are quoted in dollars, has gone up. This is according to Dr. Mugume from Bank of Uganda. And he said, noting that Bank of Uganda will continue to monitor the market to ensure stability. Ms. Catherine Kijagurwe, the ABSA head of trading, said that the shillings had continued to exhibit volatility, opening Wednesday at a price of 3,660 per dollar before closing at 3,650 Uganda shillings. This, she said, was driven by continued demand, prompting two central bank interventions on Wednesday, which relaxed the southward movement yesterday. Now, by yesterday, according to Bank of Uganda, the shillings had marginally gained, closing at around 3,643.13 against the dollar. Now, money markets were liquid on Wednesday, with overnight yields at average percentages of 6.74%. Bank of Uganda held about 400 billion Uganda shillings, 2 years and 10-year bonds. So meaning they have been releasing bonds and treasury bonds and treasury bills, and they have held at least 400 billion worth and 10 billion worth treasury bonds, and yields cleared at averages of about 9.9% and 13.75% respectively. Now, in the regional economic outlook for the sub-Saharan African published in April, International Monetary Fund said the central banks should manage exchange rates adjustments on the back of monetary tightening in the US, which could raise risk premiums exacerbated by the conflict between Russia and Ukraine. So that is a story right there to look out for as the shilling struggles with the dollar, because these influence our financial markets here in Africa and here in Uganda as well in particular. So if at all the shilling is losing value against the dollar, it means dollars are going to become more expensive to purchase. You will need more shillings to just purchase $1. Now, when that happens, since we are mostly an importing country, we import a lot more than we export, meaning we are going to buy goods expensively with a shilling, because the shillings you need to convert to the dollar, and then the dollar is at a high price. So you're going to spend a lot more money, and therefore, if the goods are coming in at an import cost that is very high, that will lead to a high price as well locally here. So there are lots of problems surrounding the market, and I think there's a lot that needs to be addressed by Bank of Uganda and officials in the Ministry of Finance. But as well, according to Mr. Museveni yesterday, the president said there's no need to panic, that we've been in tough times before, And we can definitely handle these tough times. But here at Financial Markets, we advise that at least you make sure you have enough saving and enough investment to take you through some of these turbulent times that could be coming ahead. Now, moving on to another story, the collective investment schemes have grown to over 32,988 members. Now, this is a story that has been trending over the last week and the weekend as well, with the Minister Kasaija declaring that the collective investment schemes had grown by above 1 trillion Uganda shillings for the period ended March 2022. Now, there has been a growth of 17.4% between December 2021 and March savings, that is March, the month of March, savings under the collective investment skills, which grew from over 977.6 billion to over 1 trillion by the period ended March. So we've seen a growth in the collective investment schemes. Now, the collective investment schemes pool together savings of individuals and entities, after which the money is invested with the purpose of making a profit. Now, speaking in Kampala last week, Finance Minister Matia Kasaija said collective investment schemes have grown to over 32,988 savers from 26,936 savers, which demonstrates the growth of alternative saving schemes. Now, the growth, he said, is a major milestone towards attainment of financial inclusion and savings mobilization under the Capital Markets Authority 2021-2025 strategic plan. Now, about 32,988 Ugandans saved through the collective investment schemes. The number has grown to over 26,936 in the space of just 3 months. Now, as of January 2022, there were 6 investment scheme managers licensed by the Uganda Retirement Benefits Regulatory Authority. These include Britam Asset Management, Gen Africa Asset Management, Asset Managers, ICEA Asset Management, Sanlam Investments, and UAP Financial Services, and of course, Zeno Investment Management. Now, together, the 6 have a collective holding which is in the excess of the 1 trillion Uganda shillings. That was the target. So together, these collective investment schemes have over a total fund of over 1.15 trillion in terms of worth of saving, and this is the money they use to invest and make make profit out of it for their clients. Now, he says, Uganda, Mr. Kalijira Faith, who is the CEO of the Capital Markets Authority, said that whereas there has been a growth recorded in a number and also in terms of size of the market, Ugandans under the investment schemes are still not that many. The number is not as high as he would want it to be. Now, as earlier mentioned, the number of Ugandans is still small. He said, noting that when compared to countries like Ghana and Kenya, there was a lot of that still needs to be done to bring a sizable portions of Ugandans into the investment schemes fold. However, Mr. Kalijira urged savers to be vigilant, noting that there is need to keep constant watch over how investment schemes invest their money. Now, that is a story that has been actually trending on the financial markets platform over the week, where the collective investment schemes, or call them unit trusts, have witnessed a growth of over 17.4% since the last year, that is in December to March 2022. So this growth has actually opening their eyes and starting to learn how to use their savings to invest they can out of that idle saving. Excuse me. So that is one of the things that you need to look out for, our dear viewer. If at all you have not yet invested in a collective investment scheme, please, this is an opportunity for you to actually start. And on this show, we will be bringing you some of the people in the industry of collective investment schemes to help you get started on your journey of saving and investment. Now, that was a story coming in from, the collective investment scheme side. But as well, moving on, according to Mr. Museveni yesterday, the president says there will be no tax relief for people producing local goods, for locally produced goods. And this came as a surprise to many Ugandans who, through the speech of the president, were hoping at least to witness subsidized prices for, their goods and stuff like that. But he says this will not happen. And I think if you listened very keenly yesterday in his speech, Mr. Museveni actually was not of the view that we should reduce taxes and create subsidies or subsidized taxes for us to actually control inflation. So according to President Museveni on Sunday, he ruled out any possibilities of slashing taxes as a measure to curb escalating prices. Removing taxes, this is Mr. Museveni, he said, removing taxes or subsidizing taxes would be a blunder. Removing taxes on especially imported items is suicidal, he added. Mr. Museveni said Uganda is currently stuck on making Uganda is currently stuck on making a choice between an absolute collapse of the economy or actually survival. If we subsidize prices, says Mr. Museveni, or even remove taxes on imported commodities like fuel and purchasing level remains the same, the reserves of the country will be left bleeding, according to him. Also worse, people may buy more of the commodity. Now, Mr. Museveni emphasized that removing taxes on locally produced items such as cement, sugar, and coffee would not only deplete the national reserves, but also inflict a tax revenue loss of more than 500 billion Uganda shillings. So he's saying, literally, if we reduce taxes and or subsidize or even remove the taxes, the country will lose revenue worth 500 billion Uganda shillings. Now, the route to tax cuts and subsidies was not a wise one, according to Mr. Museveni, and the wise ways are to frugally actually use these imported items or excuse yourself from using them. Then to use our own raw materials as we wait for the expanded palm oil production, which takes a little bit longer. He told the news reporters there. Now, President Museveni accused the merchants of tax subsidies of being cheap politicians with a populist agenda. Just over 3 days after security forces in Kampala blocked Honorable Dr. Kiza Besigye over surging commodity prices. Now, Dr. Besigye claimed Uganda's beleaguered economy was due to state extravagance amidst lacking output by government in responding to the crisis. But for Mr. Museveni, he says the problem of high commodity prices is easier to solve than COVID-19, and it's not new to Uganda. According to Mr. Museveni, he said, we handled the shortages of 1986 correctly. If handled well with patience and correct response, the rising prices will turn out to be an advantage to the country. That is according to Mr. Yoweri Kaguta Museveni, the president of Uganda. Now, that is something as well to look out for, because due to the increase in prices, the financial markets have suffered a lot. We've even seen a drop in prices, that is on the stock markets, because some of these things influence the way companies manufacture, the way companies are operating. It also influences the banks, how people are getting loans, the interest rate of central bank. And so the country as a whole is still trying to grapple with the inflation. But according to Mr. Museveni, it's nothing to worry about. And he says if we handled COVID, we can as well handle the increase in prices by probably, using our local raw materials here for the moment. If at all bread is expensive, let's try cassava, like he usually says. But as well as, trying to get oil from other sources, because the most expensive commodities on the market right now are fuel and oil, palm oil. Those are commodities from, petroleum commodities. Even gas for cooking itself has risen. Like recently, a cylinder refilling cost about 57,000, but right now on the market, if you go to refill your cylinder, a small cylinder, it will be at about 70,000 Uganda shillings. So the commodities that are rising in prices are actually very critical because people cannot live without moving. People have to move to hospitals, people have to move to work, and people use cars, and cars take fuel. And so if prices of fuel remain high, they will influence the way people and goods are moving. They will increase the cost of production, and this will lead to an average rise in prices. So there's still a lot, to actually tackle in terms of inflation. But on this show, like we promised, we will be bringing you experts to give you some advice, financial advice on what you at home can do in order to go through some of these tough financial times. You don't have to keep those savings if at all actually you're not using them. You can save and invest using that saving, and that can save you in some of these economic troubles that we are facing as a country and as a world. Now, we are going to, after the break, we shall be going into an interview which we had with Mr. Shadrach. Mr. Shadrach is a chartered finance analyst, and we were talking about the central bank rate. Can the central bank rate influence inflation? And if so, how does it do that in conjunction with the bank rates, the other commercial bank rates? How do they help in kind of controlling inflation? And how does the Bank of Uganda use the central bank rate to control inflation? Because at the end of the day, the central bank has control over most of the economy through, issuing treasury bonds and bills, through, stating the central bank rate. And that central bank rate is the rate at which the commercial banks actually get money from the central bank. And then basing on that rate, they also create their own rate for you to actually access their loans and maybe expand your business or start your business and so on. So we will be later on in the show, a few minutes away, we shall talk about a little bit more about that central bank rate and how it has influenced inflation with Mr. Shadrach Collier, who is a certified financial analyst. But as well, I want to remind you that don't actually put all your eggs in one basket, as the saying goes, because that is the riskiest venture you can take. Please try to spread out your risks. Try to actually find alternative sources of income so as you can actually survive this inflation, because inflation has really created a lot of stress on the economy. It has created a lot of stress in homes. People can no longer afford transportation to work. People are walking to work. If you go to Kampala today, many taxis actually have increased their fares because of the fare price increase in the fuel prices. So there's a lot that we need to keep our hands on. And on this program, we promise you to give you the advice you need and the people who will help you actually know how to use that small money left in these tough economic times. Now, before we go into the break, we will also talk about the capital markets later on the show, how the Capital Markets Authority is regulating licensed brokers and licensed listed companies, and the role of capital markets generally, and also investor education. We'll be bringing you a few experts to talk about investment and also talk about how the capital markets have been faring in the last quarter, that is from January to March, so that we get to know if we are making progress in terms of our local capital markets or not. Don't forget to always follow us on our social media platforms at Smart24 Twitter and Smart24 Official on Facebook and on YouTube as well at Smart24 TV. My name is Anthony Sebale. Let's go into a short break. When we return with Mr. Collier Shadrack, Chartered Finance Analyst, who will talk about inflation and the central bank rate. Don't go anywhere. We'll be right back.